Whoa! Hey folks, Juan Restrepo here, President of the Florida Real Estate Investors Association, bringing you this week's edition of The Fan, the FLREIA Action News. And what's going on this week? Well, we've got quite a bit going on. Let's see what the headlines say. Pay cuts at Fannie and Freddie, new HARP guidelines, the calm before the storm, FHA looking for a bailout, Clerk to sue MERS, and Miami Dolphins. All right, so let's see what's going on in the headlines this week. From the Wall Street Journal, let's see what's going on. Pay cuts at Fannie and Freddie. That's right. The House Financial Services Committee has approved the measure that would put employees of the mortgage finance companies on the federal pay scale, effectively cutting the pay of thousands of employees and suspending the packages for top executives that can run to millions of dollars. Now, the measure passed the House committee on a 52-4 vote. It would need to pass the full House before moving to the Senate, where the key lawmakers on financial issues have expressed reservations about it, as I might do myself. But anyway, are these now? Is Fannie Freddie a government agency or a private company? Well, Republican Spencer Backus, he says taxpayers own these companies and staff should be paid accordingly. Now he's the chairman of the House Financial Panel. He called the current compensation policies unreasonable and unjust to taxpayers. Edward DeMarco, acting head of the FHFA, said Tuesday that lawmakers shouldn't treat the firms as government agencies because that would compare the companies to something they are not. Top lawmakers on the Senate Bank Committee also sounded notes of caution. While cutting pay at Fannie and Freddie may sound good politically, you've got to have financial talent running the two firms. This is Senator Richard Shelby, Republican from Alabama. He says, I don't think you can just take people off the street to run an enterprise like that. Okay? Very true. I mean, you're talking about this is a company that handles $5 trillion worth of loans. Not just some government employee can head this thing up. No offense there to any federal employees out there, but this is somebody that's got to have some financial savvy and expertise, and with that, you're going to pay for it. Yeah, maybe some of these compensations have gone a little bit overboard. Maybe they cut back on it, but again, stock ownership in Fannie and Freddie isn't that good. They're worth close to nothing, so I guess they're trying to make it up on the compensation with the bonus. But anyway, so that's my humble opinion. All right, from dsnews.com, new HARP guidelines. Fannie and Freddie have released the new refi guidelines. All right, there's been an elimination or revision to loan-to-value caps, depending on the program. Now, the original mortgage must have been sold to Fannie or Freddie prior to April 1st, 2009. The borrower must not have been behind on their payments at all within the most recent 6-month period and had no more than one 30-day delinquency within the last year. Fannie and Freddie are also removing the requirement that the borrower on the new loan meet the standard waiting period following a bankruptcy or foreclosure. The requirement that the original loan must have met the bankruptcy and foreclosure policies in effect at the time the loan was being originated is also being removed. So I guess it really doesn't matter if they've already qualified for the loan. Anyway, Fannie and Freddie are making it easier for the competition to flourish, subsequently eliminating the risks associated with the reps and warranties. So could see a melee there of ads coming out. Hey, refinance. Now, loans under 80% LTV are not eligible. Yeah, how about that? The responsible ones don't get to refi in better loans. The program has been extended through December 31st of 2013. So if you're in a situation like that, jump on and get a better rate, I guess. All right, the calm before the storm. Now, this is according to the latest IAS 360 House Price Index from Integrated Asset Services. The home prices rose 4% during the third quarter. Now, Paul Sven, CEO of Integrated Asset Services, says the markets continue to act as though we've seen bottom and buyers should be encouraged to go out and buy. He says the reality is lenders, for any number of reasons, are increasingly unable to pursue foreclosure. That means fewer foreclosure properties are coming to market and prices are not truly reflecting the residential housing market. Nonetheless, the recent calm has made its way to all regions of the country. The IAS 360 found price increases in all 4 census regions in the third quarter, with the highest occurring in the Midwest, with a 4.4% increase. Now, the South followed with a 4.2%, and the Northeast fell in line with a 3.8% increase. The West, now this is the region the hardest hit by the housing crisis, posted a 0.3% increase for the quarter. Now, despite these increases, prices in all four regions remain below their levels of last year. So, the CEO says, it's kind of crazy that, we're seeing this kind of market, especially with the shadow inventory just looming. So, interesting to see what'll happen going into next year. Anyway, FHA looking for a bailout? That's right. FHA may need taxpayer aid or higher premiums to bolster its mortgage insurance fund after reserves fell to a record low this year. This is according to an analysis that was presented to the Congress. The FHA, which has paid out $37 billion in claims related to defaulted mortgages in the past 3 years, faces a 50% chance of having to raise money because its net worth has fallen to near zero. This is according to an independent analysis cited in the agency's annual actuarial report that was released this week. The capital ratio, a measure of the fund's ability to withstand losses, fell to 0.24% in the year ended September 30th. That's from 0.5% a year earlier and 3% in 2008. Now, this is according to the Moody's Corp analysis. The FHA has failed to meet the legal minimum 2% ratio for 3 straight years. FHA officials said they don't believe home prices are likely to drop far enough to push the fund into insolvency. It would take a very significant declines of home prices to create such a situation. The FHA has never required government funding because it has supported itself with insurance premiums, raising rates, and tightening credit standards for the loans it insured if its solvency was threatened. Now, the agency could use these policy tools instead of taxpayer subsidy if the economy worsens. So for those of you in an FHA loan or looking to get an FHA loan, ouch, you could look for a price increase on your premium there. And it's very tough to get these things off. They have to reevaluate the house, and heaven forbid you're not at the 80% point. Anyway, the FHA could need, now these are from the critics, the FHA could need as much as $100 billion in subsidies if market conditions worsen. So looks like, they're saying taxpayers could be on the... I forgot what the saying is. Anyway, on the hook for the loan for this money. So anyway, we'll see what happens here. All right, Palm Beach Post. A clerk to sue MERS. That's right. A Duval County clerk, that's up in Jacksonville, is seeking a class action status in a lawsuit filed October 31st against the Mortgage Electronic Registration Systems, or MERS, which he said operates an unlawful scheme. And now, MERS was created by the banking industry as a way to streamline and track the transfer and sale of mortgages, because we're in the information age now. We got to get faster. When a mortgage is originated by a lender, it can go into MERS, which becomes the mortgagee. This allows the company to internally track the transfer, sale, or securitization of a loan instead of each move being recorded in the public record. Now, according to the lawsuit, the MERS system avoids the recordation requirement and the accompanying fees, and in doing so deprives the Florida clerks of court fees to which they are entitled and the public of its ability to identify the true mortgagee of the mortgage property. So, there's a suit there. Sharon Bach did not comment, as she says that she just heard of the suit, so wants to get a chance to check it out before she makes her comment. All right, Miami Dolphins, hey, an impressive win. How about that? 2 in a row against the Redskins. Funny thing is, I haven't been able to watch them during the move, and we forgot to install the cable here, so I had to listen to it on the radio. But man, that was great. So I'm afraid to watch it this weekend, because now I'll probably watch them lose. I hope not. Moore looked really good. The defense, they held another opponent to 0 TDs. They scored 3 field goals. So, the Redskins. So, hey, looking strong there, guys. That's exciting. Let's see if we can hold it up. Next week, we're against the Bills. Our arch rivals here in the our division. So we'll see. Look forward to that game. And anyway, that's been good. Good job, Soprano. Way to keep these guys going. All right, what's happening at the Florida Real Estate Opportunities webinar every Tuesday at 12:45 with Sharon. Be sure to check it out. We've got a lot of deals. We've got deals galore. And rents are great right now. All right, God's Property on the morning of the 17th. Be sure to register for that. Mastering 2012 and Beyond workshop with yours truly. Be sure to be there this Saturday. You do not want to miss this training. Get yourself ready for 2012 and beyond, and turn your difficulties into opportunities. All right. Hey, we're having a housewarming slash open house on the 25th. That's the day after Thanksgiving. So if you can take time out from your Black Friday shopping, come and join us from 10 a.m. to 6 p.m. Give us a call here at the office for directions, or check out the website. And then cash flow on December 2nd. That's Friday night. Get back on planning and dethroning Mr. Mike Poole. Get him off there. And then Christmas party, December 15th. Don't forget to bring an unwrapped toy for Urban Youth Impact as we collaborate with them every year. And please register for that. Great time. It's a black tie optional, so we'll be dressed up in our nines here. All right, that's the news. That is the news for this week. We look forward to seeing you at any one of our upcoming events. Don't forget to follow us on our social media at Facebook.com, YouTube.com, and Twitter.com, all /FloridaREIA. This is Juan Restrepo signing off. God bless. See you.
The kingdom of God is within me. I carry it wherever I go. Got me some joy, joy.